Hey everybody, Jason Sherman here. In today's episode of Zero to CEO, I'm going to talk to an online business expert. His name is Mike Vranjkovic. Welcome to the show.
Hey, Jason. Thank you so much for having me on today.
And today we're going to talk about how entrepreneurs can own established online businesses. But before we talk about that, let's talk about how an entrepreneur can even get to the point of owning an online business that's potentially already thriving. What are some of the things you think of when you hear about an entrepreneur who's not an accredited investor, so they're just getting started in the world of entrepreneurship? What are some of the things you can think about that can help them become more successful in general?
Yeah, I mean, I would say whether it's online businesses or other types of businesses, there's a lot of the same skill sets are required. For online businesses, as you know, as most of your listeners know, a really great way to build wealth is to own your own business, to own your own small business and grow it, creating cash flows and equity and value in that business. What we do and what I'm happy to talk about is we apply that same model with online businesses. So businesses that are completely online, no brick and mortar location.
Are we talking like Shopify type of stuff, like e-commerce, or are we talking more like a Facebook kind of startup?
Probably more in the Shopify side. So like the most common types of businesses are storefronts. They could be selling things through their own website, like Shopify. They could be selling things on Amazon. We're also talking about web. Sorry, go ahead.
Not to cut you off, I just want to really dive deeper into this. So you're talking about a Shopify e-commerce website that sells t-shirts, and they're making $5 million a year or whatever. Why would they need outside investment if they're already killing it with their sales? Like, why do they need, people to invest in them if they're already making money?
Yeah, good question. So we usually don't, in our case, we usually don't give them investment capital to grow the business. We'll buy the whole business outright, and there might be many reasons for selling.
So you have a person, someone like me. I built an online website. It's making $5 million a year. It's projected to make $50 million in 20 years or whatever. And I don't want to run it anymore. I want to go to the beach, sipping on margaritas. So I sell it to you guys, right? Is that what you're saying?
Exactly. Yep. And that's exactly it.
And then the investors that are part of your group all own a piece of that company. Who runs the business?
Yeah, good question. So we raise the money from accredited investors, and they all own a fractional piece. And then we partner with operators or portfolio managers, as we call them. So these are experienced entrepreneurs that have run very similar businesses in the past and have been able to grow them. Okay.
Have you seen a shift at all during the pandemic? I know we're still kind of reeling from it and still coming out of it. It's been 4 years. It sounds crazy, but 4 years have gone by since we've been locked up. And what kind of trends did you see emerge during this time? Were there any big opportunities that came out of this, or were there a lot of negative threats that came out of this? Like what did you see?
We saw a lot of both. So I think the biggest impact that it had on online businesses, it accelerated the trend of things going online. So people being more comfortable shopping online. It also, people started working from home, so it moved more things online. So we saw a massive spike in e-commerce sales, traffic. And then, of course, some types of businesses got hit. So if you had a travel business during the pandemic, that probably didn't do too well.
That's true. Hospitality probably took a hit in general, I would think, right? Hotels and malls and things like that. So absolutely. How would an entrepreneur, let's say somebody is an accredited investor. They're making $200,000 a year at their job, or they own $1 million in assets, or the other string of SEC rules. What exactly would they do to identify the types of online businesses that has significant growth potential and is a smart investment for them? Because, they didn't just make their money by chance. They worked hard to earn it. I'm sure they want to keep their money and make it grow. So how do they make that choice?
Yeah, they've got two options. The first option is to go out and buy their own online business. And then the key here is finding the type of business that you know how to run and where you can apply your skill set to grow it. The reason why WebStreet was started was to give investors a passive option. So in our case, they wouldn't be picking what business. They would invest in a diversified fund, owning anywhere from 5 to 10 different businesses run by different portfolio managers. So it might be a mix of those storefronts that you talked about. It might be websites, it might be software companies or service companies.
Yeah, because I was just wondering, like you just mentioned using your skill sets and your knowledge base to choose a business, but what if you don't have any of those? What if you are a doctor and all you know is medicine, but you're always interested in technology, but you don't have time to start an e-commerce website, nor do you know what to invest in because you're investing in the, the S&P 500 and your regular stocks. So, you're saying in your case, you would invest in 5 to 10, but let's say you never heard of WebStreet. You're just coming off the street. You're a doctor. You have some wealth saved up. How do you choose an attractive business? Like what would you look like? Let's say WebStreet didn't exist. What would you look for as an entrepreneur? I'm looking for these three qualities in order to invest in them. And how would you even approach that?
Yeah, great question. And a lot of this applies to other types of businesses as well, not only our online businesses. So personally, I would look for cash flow positive businesses. So I wouldn't go out and buy distressed assets or turnarounds. It's a lot easier to incrementally grow something without taking on excessive or additional risk. Even though sometimes it looks like you're getting a really good deal with these distressed assets, but we specifically stay away from those. That's our first rule. If it's declining, we pass and we move on to the next one. The second thing is, and this really depends on your goals. If you want to learn how to run it yourself, that's a whole different thing. If you don't want to run it yourself, you need to partner with somebody that has run it. So maybe you can in some way keep the owner on board to run it. Maybe it comes with a management team that can run the day-to-day operations. Maybe you can partner with an experienced operator to run it. So that's the biggest thing, finding an operator, somebody that has a track record of running and growing these types of businesses. And if that's yourself, obviously start small, learn along the way, and then level up as you go.
And
then of course,
there's probably some downsides if I ask this question of like, what if you say, okay, I like this business that I found out here, but I can probably start it and run it myself and not pay X amount of money for this business. What's the pros and cons of doing that? I mean, a lot of these Shopify sites are very easily duplicatable.
Yeah, if you find that during your due diligence, then you should definitely not buy the business. I mean, the biggest thing that you're paying for, if you look at these online assets or online businesses, the way they're priced is not like stocks, where they're priced based on expected future growth. They're really priced on expectations that this revenue stream or this profit stream will continue. How likely is it going to continue? Growth has a little bit of a factor, and a big part of that is, will there be a whole bunch of competition? Will there be a whole bunch of copycats that are going to take my market share? And really, like just like any business, but not only online businesses, what you're buying is you're buying the product market fit, and then you're buying a multiple of existing cash flows, and of course all the processes in place for the business to run.
And all of that, I said interesting because in all of that, I didn't hear that you're investing in the team behind it. And as an entrepreneur, I've always thought that investors are investing in the team or the entrepreneur. They're betting on the horse, right? Because it's a horse race, essentially. Which horse is going to win that race? And so I understand cash flow positive, product market fit, great business. But what if you have some schmuck driving the wheel and it crashes the car? Then you made a bad investment. So how do you...
Well, depending on what size of businesses you look at, if you're looking at these smaller, let's say micro private equity businesses, oftentimes they're owner operated. So it might be a solo entrepreneur or an entrepreneur with a small team. And as the guy buying the business, oftentimes you're replacing the entrepreneur. So super important to realize the type of work and skill required.
So you don't even keep the team on board. So let's talk about this a little bit. So I kind of want to know more about what you guys do and how it works. How does, let's say an entrepreneur just sold a business and they have $1 million in assets, they're accredited. How do they then go about working with you guys in order to own essentially a portfolio of online businesses? How does it actually work? And do they have to raise money outside of what they have from other investors to kind of put together a fund, I guess, to then acquire a large amount of these businesses?
Yeah, good question. So that's more of a, not on the investor side, but more on the portfolio manager operator side. So let's say you're experienced online entrepreneur. You've done this multiple times before. You've bought businesses, grown them, and sold them, and you have a good track record. They would come to us and say, hey, I'm interested in running my own fund under the WebStreet umbrella. We would vet them. We would look at their track record. We would do a whole bunch of checks. We would put them through simulation due diligence. And then we would put them in our fund, usually along with another 3 to 4 portfolio managers. And then we would package it up as a single fund, and we go out and raise the money from investors. After the money's raised, we go and make the acquisitions. So as an investor, exactly like you said, you're betting on the horse. Sorry, you're betting on the jockey. So
Right.
you know the guy's experience, you know what he's done in the past, but you don't know yet what the acquisition will be. You just know you're going to get a diversified portfolio similar to past funds.
And about those past funds, what kind of track record have you guys seen from, let's say the last 5 deals you've done? What have been the success rates on those?
Yes, so we've started about 3 years ago. So far, we've done 6 funds. We've deployed about $20 million, bought 40 different businesses. In terms of returns, right now we're doing 12 to 15% annual cash yield. That puts us on track for about 20% internal rate of return, including the exits. And it varies wildly. So some assets will significantly underperform, some will overperform, but that's the importance of a portfolio approach.
Diversification, right? Starting it. It's very interesting, and you're new. It sounds like 3 years and 6 funds. So, what's the future hold for this market in general of this kind of business acquisition, investor jumping into portfolios? Like, I've never heard of this besides like crowdfunding. Like, we're currently, for example, our startup Spinner is currently on WeFunder. We're crowdfunding, trying to raise money for our startup. We just hit a certain amount this past weekend that gave us a milestone. So we know what it's like to crowdfund to raise money from non-accredited or accredited investors. Yours is more for just accredited investors. So I've never actually heard of this except for like real estate investments, like I think they're called REITs. So I think I've heard of it in that sense, but not for this particular. So is this new? Did you copy another model? Tell me a little bit about the backstory.
Yes. So REITs, excellent thing to compare it to. I mean, the real estate investor market has been doing this for quite some time. Now you're starting to see it in other alternative asset classes. So like there's a company out there called Masterworks where you can buy fractional ownership of a expensive painting. They're doing the same thing with farmland. They're doing it with startups, of course, and there's all these other alternative assets. So the way I would look at this from an investor perspective, you have a certain amount of net worth, you invest a lot of it in stocks and bonds and real estate, and then you have a certain alternative investment allocation, and you put that in different types of non-correlated assets. In terms of
Bitcoin, precious metals, that kind of stuff too.
Yeah, I mean, up to you, up to your risk tolerance and your
But
goals.
but is that where you kind of put yours in that kind of other category? Because you have real estate and you have the stock market. Those are two proven, bonds, treasuries, that kind of thing. Those are the things that people tried and true. But then the outliers are always going to be gold, silver, and Bitcoin and other cryptos and the ETFs that just came out. So are you saying that maybe what you do is also categorized as that, like a non, first tier kind of strategy for your investments, or how do you look at it?
Similar. I would say small portion of your net worth, definitely not a big chunk of it. Different types of alternative assets, more risky types of investments.
Okay.
I wouldn't really compare us to crypto. I would put them in a whole different risk category.
Well, yeah, but in that kind of lane though. Interesting. And where can people find out more about your company and if they're potentially interested in investing in some of your portfolio companies?
Yeah, our website is webstreet.co. So if anyone's interested in learning more about the funds as an investor, you can find all the information there. If anybody listening is a highly experienced online business entrepreneur, if you've bought and sold businesses in the past and you have a good track record and you're interested in doing a fund with us, there's information on there as well.
Interesting. So you have 2 different options. I like it. Webstreet.co, guys. Check it out if you're accredited or you're a very talented entrepreneur. Thanks. Appreciate it, Mike. This was awesome. And we'll see you guys in the next episode.